Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is October 28th, 2014, and today is Tuesday. So looking at the market today, very, U.S.-based market information coming out today, economic calendar, just durable goods coming out later today at 2:30, and then USB consumer confidence at 4, and then we have a FOMC statement at 8 o'clock. South African time. So these are basically in anticipation to tomorrow's big interest rates decision. So I would say it'll be lull right before the storm. Okay, but you never know. So got to keep informed and know what's going on in the markets in terms of the news coming out, so you could get yourself ready for when the news actually does come out, and you can protect yourself from any whiplash of the markets. And just knowing that there's certain information coming out in the markets is it helps you with your trading. It helps you devise a plan for your trading, so on and so forth. As you all know, we give these webinars, and I've always said a planned trader is a profitable trader. So it's just you need to know the news for the week. Anyway, all right, looking at the EURUSD here, we're at 127 and change. Coming off our lows from 126. This was a nice baseline that we set up for ourselves, and we're making lower highs, higher lows, but it looks like it's flatlining right here on the 27. Okay, we did make a huge step from the 25 level right here, so we've rallied a little bit back, and we're trading between 128 and let's say 126, and now we're right in the middle of that, which we can have anticipated. We're standing on a previous resistance and another previous resistance, but we're trading in a range right now. There's no like we said, we expected this to consolidate, maybe taking a little bit sharper spike to 129 and just low and just shy of 130. But as you can see here, the dollar is still very strong against the euro, holding its weight, and we're just trading in a range. You could range trade this, buying it, let's say, at 126.40, selling it out at 127-ish, 60 pips, not a bad trade at all. But I like this type of setup because you know what your baseline is. It's clear what your stop loss should be, because there's a baseline for it. So let's say you picked it up at 126.34, you could probably put yourself at a stop loss of 126.20 on the downside if you bought it. Now on the upside, to short it right here, I don't know if I'd be so inclined to do it, but to short a little bit at this stage at 127 and to put a stop loss just above at 127, 27.30, in anticipation that it'll retrace back to 126-ish levels. So you could play these levels, however much you'd like. I wouldn't get so aggressive in them, but they're definitely there as an option to trading them. Looking at the USD Japanese yen, also just retracing a little bit from its highs. We're looking at a 1-hour chart. The US dollar kind of retraced yesterday, got a little bit weaker across the board. So we're seeing this little retracement. It's still overall very strong, just shy of this 110. We got up to it just before, and now we're in this middle range. We retraced all the way down to 105, but by and large, this currency is still very weak compared to the dollar, and we're trading between this range. So until we see that we're challenging this 110 level or challenging this 105 level, we're in the same predicament as we are with EURUSD, where we're trading in the range. So just to be aware of that, you can actually accommodate your size according to what's going on in the market. So that's really important. Looking at the GBPUSD, we got beaten up all the way down to 159. We're trading at 161. We kind of made a bull flag right here before, and we took off all the way to 165, but couldn't maintain it, and then we rallied right back. So we're not rallied, we sold right back. So we're at these levels right now, about 160-ish. Again, we're also trading in a range until this until the dollar sees that it's getting even stronger. I'd be very wary about getting so aggressive. Looking at the gold. Now this is a 4-hour chart of the gold. We discussed this before, just last week. We said, once it got to 1250, let's see if it can maintain this level, to go higher. And you see that it didn't maintain the level. It almost like leveled off. Like there's a straight line right here. Look at this. Okay, look at these bars. A straight line. And then we just, we broke 1245, and then we broke 1240, and then we broke further, and now we're at 1225. So, I'm more of a bearish trader for the gold just because it's been so weak over the past two years almost. But by and large, you can see that. You can see that it's been so. Let me just erase this. You can see that it's been so weak over the past 2 years. Okay, from its high of 1800 here. So this is where we're going from 1800 down to 1230. We have this baseline at 1180, let's say 1190. Okay, right here. But we jumped off of that from the session lows, and from the beginning of the year, and now we're just in the middle of that at 1229. We may revisit this level. Okay, and as you can see, we're just at that level. I would say that going towards the end of the year, we'll be retesting it down here at 1200. But it might take some time until we get there. But that's just my personal prediction for the gold for this year. Looking at the Dow Jones, as we said, this was a no-brainer. Got down to 16,000, dipped just below 16,000, and then just took off almost 1,000 points. So, you don't have to be a rocket scientist to anticipate, these type of moves, especially in the indices. Sold completely in October. Look at this. Since September, we said once you get into the fall, you sell off, right? So look at this, September 29th, right? That's October. See the date down here? Okay, we're looking at October 1st. From October 1st, we were trading at, let's say we sold off to 16,800. Sold off all the way down to 15,900 for the month of October. And the last 2 weeks, it's almost like, perfectly timed. For the first 2 weeks of October, we sold off. The last 2 weeks of October, we're rallying right back. And we find ourselves in the same level as when we entered the month. So, month to month, if you look at it, you're going to say, wow, there hasn't been any change. But obviously, this has been a roller coaster for investors and a tremendous buying opportunity for those investors that were keen to the market and realized that this was a typical fall sell-off, and now we're going into the end of the year, and I would anticipate that we'd go into the end of the year quite strong, but that's just my general feeling. Who knows? There's other factors that are that you need to consider as well. Ebola, some other viruses that are jumping around the world, some really scary stuff. So that shouldn't rattle the market because business is business as usual. But you really need to keep an eye on what's going on in the Dow Jones. Definitely worthwhile trading, okay, because it's really trading very well, and we anticipated last year, and I mentioned it a few times. Looking at oil, pretty much flatlined at $80 a barrel, as you can see here. Dipped a little bit below $80 to $79.50, but by and large, looking at a daily chart, we're at the bottom since I could remember, for a long time, since 2012. So going into the winter with this tremendous sell-off, we may find ourselves in the $70 range pretty soon. This is usually when oil rallies into the winter, but as you can see here, it's really dipping very low, and as anticipation, you can take some off here. Buying it around $80 might be a decent move. Don't generally like picking bottoms, but if you keep yourself a tight stop loss, you may see some upside reward. This is Fred Razak at CM Trading. I wish you guys a great trading day. Thank you.